All right, everybody, welcome back for another great episode here at Leading Crypto. I'm CVO, always joined by the beautiful Magic Internet Money, and today we have a very special guest, Gareth Soloway. How are you doing today, sir?
I'm doing really well. Thanks for having me on. It's cool to be
Yeah,
here.
absolutely. Pleasure for you to be with us. Magic, how are you today, sir?
Always fantastic. You know that.
I'm doing really well. Thanks for having me on. It's cool to be here.
Absolutely. Pleasure for you to be with us. Oh, somebody's
Oh.
got the background on there. Might have been me. Perfect. So today we got a really nice show. We really wanted to have Gareth on as we were kind of coming into this time frame as we got the FOMC meeting kind of being conducted today, and then I think the announcement's obviously going to be brought up tomorrow. If you don't follow Gareth, we've got all his socials and everything in the information below. He's pretty much been talking on this, for quite some time. He's pretty avid, knowledge base around the situation. We just want to kind of pick your brain a little bit, Gareth. Magic and I, we had a couple of questions as well, just kind of see how things are lining up, what this could mean for the markets as a whole, not only just Bitcoin, but just kind of see what your feelings and thoughts are, especially now that we are here at the week of into November.
Yeah, so tomorrow's the big day, 2 p.m. Eastern time. That's when we're gonna find out what basically crypto is gonna do, what the stock market's gonna do, what the dollar is gonna do. Everything's gonna revolve and has been revolving around the Fed. And I mean, as of now, I think yesterday per the stats, it was an 88% chance of a 75 basis point hike. So the market already expects that, right? So the market expects 75. What the market's trying to figure out is what are they going to do after? And there's kind of this hope that they're going to take a pause for a few months and see whether or not the economy is supportive of further rate hikes. And that's kind of why we've rallied off the lows, at least in the S&P 500 over the last month or so, and with this hope that we do see this kind of pause. But what's interesting is today, we saw the markets open up. The S&P was opening sharply higher, and then some JOLTS data, which is some jobs data, came out, I believe, job openings, and the dollar started to rip because it was a strong number. And again, you could see this market kind of flipping back and forth between what's the Fed going to do? What are the likelihoods of a pause versus not a pause? So it's going to be really amazing to see tomorrow. I do think if I had to guess, I'm favoring a pause, not so much because of the U.S. economic data, but because we've seen other foreign countries get very close to catastrophic issues. Like we know the UK pound was collapsing and the Bank of England had to jump in. Then we saw a couple Fridays ago, the Bank of Japan had to jump in to support their currency. And so my fear would be that if the Fed continues to hike, eventually they're going to break other countries. And I think that's a concern for the Fed.
That's a really good point. There's a lot of people that don't really look at that because we're so focused on what's going on here. But yeah, Japan has been a very wild scenario coming in along with the strengthening of the dollar. Like just something that I think some people, they saw it coming, but yeah, they just printed and printed and printed. And eventually when this happened, it's not been good for other people. I'm kind of in the boat with you with the 75 basis point and the pause type thing. You think it's just because, they front loaded rates so hard that now they need to see if inflation data is going to reflect the rate changes. And it does take time because it's lagging, behind a rate increase. So
Yeah, I definitely, that's kind of where I am, where it's like, and I gotta believe the Fed knows this, but we know that like it takes a certain amount of months for every rate hike to be reflected in the economy. And so considering we've done 375s already and tomorrow would be 4, how many of those have actually filtered into the economy? And is the Fed starting to get nervous that they might overdo it and then cause kind of a bigger recession or worse? And I think that's, at least for me, that's my big concern, is how much front loading have they done? And then if they keep doing it, at some point, things do break down. I mean, we all know this from history with Fed and the Fed and everything.
No, I feel that. Yeah. Cause I think, at this point, kind of piggybacking, if they were to break something, I don't think it's just a matter of a small dip anymore. I think that it's, something that sets us back for years at that point in terms of an economy, be digging ourselves out of there. Great opportunity for the investor, if they're ready, if they have the cash, that's the issue though. Do they have the cash on hand?
Yeah. I always say that too, right? Is that, everyone's like, oh, bear market, it sucks. Well, yeah, if you're like a long-term investor, it's bad. And that's where I think we are. We're going to be in this kind of like sideways Brazil type market where Brazil had this crazy move up from like 2002 to 2008. And then since then, it hasn't made a new all-time high since 2008. So again, I don't know if it'll be 14 years before the US does, but I bet it's close to 10. And I think, again, you're going to see this sideways move. But going back to what I was saying is that within bear markets, the best opportunities arise. I mean, think back to Bitcoin when it was at 3,500 in the last bear market, then it ran to 69,000, and you can see these type of moves. So again, everyone should just be aware is, yeah, I mean, long-term investing may need to take a pause. I feel like they've had their day in the sun, right? Ever since the Fed was printing money, you could have just gone long and been happy. But now it's time for us swing traders to really emerge.
Yeah, no, you make a really great point there where, I meet a lot of people and they're like, oh, the stock market's so easy to trade. And I'm like, yeah, I mean, it's been an up only environment for so long. All you had to do is put money in it, man. And you made money for the longest time, it seemed like. The only people that were upset about it, kind of like you're alluding to, the 3,500 Bitcoin, is I remember when that low happened and people were still waiting for, a gap to fill at like 3K even or sub. And I was like, dude, if you're really on the fence, like you should just invest now and just save some. But people don't, and then they don't want to believe the rally, things like that. So speaking of this rally, obviously tomorrow's going to probably affect it. We'll probably see some volatility. We seem to do that a lot now. For us, targets are, anywhere from 22.5 to 24,000 if, they do a pause, kind of like you're saying, like if the commentary is favorable. Is that in line with what you're thinking, or where do you think the rally's going in the near to medium term?
Yeah. So, I mean, what's so crazy about this is that I try to use what I kind of speculate in terms of the forecasting and then look at the charts, right? And I know you do the same thing. Is it cool if I show my charts?
Yep.
Let's see it. Awesome. So like one of the interesting things about the S&P chart here on the spiders is that we've had a pretty decent rally and we're kind of just up into this resistance now, right? So it's interesting because we're right into this level coming into the Fed. So you're either going to get a breakout where the SPY then goes up to this longer trend line that stretches down from the all-time highs, or the Fed's going to disappoint the market and then we're going to see this crazy drop back down, where eventually I think we're going to this area over here, which was that pre-COVID February 2020 high. So it's really kind of showcasing, and I love how charts do this. They bring you to this point, and then it kind of coincides with this epic economic data or Fed decision or earnings announcement, and it's like, okay, well, it's either going to be a blast off or a crap out, and I'm leaning towards a little bit more upside. But at the same time, I got to respect the fact that we are into some resistance here on the charts.
Yep. We were talking about that in a previous show, that now is not the time to be looking for fresh longs when you're right into resistance. You had the SPX coming into it. Bitcoin's obviously hitting some local resistance. And it's just one of those things where everyone's, in the space, it seems like right now, everyone's at each other's throats. That's how you know you're in a bear market still. They're either, we're going to 10K for sure, or the bottom is in and you guys are all idiots and I'm right. Like that seems to be the sentiment across the board. And I was like, oh, no one wants to be neutral anymore. And I think that the people that are neutral, though, are going to be the ones that are able to kind of reap the rewards from the other people's follies. Because I think at the end of the day, they'll end up both being wrong here, because we could end, like you said, like a Brazil style market where you go sideways. And so the people screaming for new highs are going to be wrong, and the people screaming for new lows could end up wrong. And it's just kind of like you said, the swing trader is going to dominate the market.
Yeah, let me show that Brazil chart so everyone can kind of check this out, because it's really a remarkable chart, and the similarities with the run in the NASDAQ 100 or the S&P is crazy, right? So look at this run here and look at how vertical it was. And then if we go to like the spiders chart, or let's just do the SPX chart here, look at the vertical nature since 2009 of this run, right? So it's very eerily similar. And then if you look at what happened is, I mean, there were some great rallies. I mean, look at the drop and then the pop, and then, but again, look at what this market has done. Now, like a lot of technicians out there, I'm keeping actually a really close eye on this chart, because if it ever breaks out, you could have a really nice bull run out of Brazil here. It hasn't yet, so you got to respect that. It's still in this kind of wedge pattern. But that is something that I'm keeping an eye on as a potential place to park some money, obviously, within the proper allocations. But if it did break out and the US is kind of in this new bear market for longer periods, that could be a kind of a cool idea there for the charts.
Yeah. Yeah. A lot of times big consolidation comes off big moves like that, as we know. So I think I was trying to, emphasize that in 2021. I'm like, you guys have to realize, I know everybody's saying we didn't get a blow off top, but I was like, I would hardly say that when you look at the chart from, March up to the 65K high, even it was like it's straight up, and then you just had this massive range. And I was like, with great, you know, accumulation, and then eventually that distributes into higher prices, that's got to also distribute those buyers and sellers into a really big range. So do you think there's any hope Bitcoin trades in the, you know, $32,000 plus range in the next 6 to 12 months?
Wow. I'm not in that camp personally, but one thing I know is that, you know, I know nothing in terms, I mean, Bitcoin can do anything it wants, but at least per the charts, I'm definitely more in that groove of thinking the max upside here would be kind of around the 25,000 level. Yep. And if we take a look at the chart, you know, that would basically be taking us to the high end of this channel here. So we have a channel on Bitcoin. If you connect these highs, well, number one, the lows connect right out, then the highs. And it's this beautiful kind of bearish channel. And I think what's interesting about a bearish channel is that if we did rally to 25, guess what's going to happen? And you guys know this, like everyone's going to get bullish, yep. But you're still within the channel, which is a bearish channel inside the last move down. And so it's almost ironic in that way of it has to sucker in enough people before you can get that next dump. So again, I'm not sure if it'll go to 25, but we are making what I would consider a small micro bull flag here, or in spirit of bull flag, which at least does favor some upside, maybe to 22.5, which would be first resistance here, and maybe upwards of that 25 level. But I'm still in the camp personally that I still don't think we've reached bottom. Being through the tech bubble back in, you know, 99, 2000, 2001, and the similarities with the .coms, it's just, crypto is just too, it would be too weird to, it's not enough of a flush out to get to finish out crypto yet to put in a bottom, in my opinion.
Yeah, no, I've heard you use the term that, you know, it had an 85+% retrace in markets where you had quantitative easing and now you've got tightening. It makes no sense for you not to get something similar. So I totally understand that. And I agree, like common sense would say so. In the short term, though, it's one of those things where, as you know, we'll take advantage of all the opportunities that are out there. Because
yeah, man, that's the greatest thing about traders.
There's always another opportunity. It's what, you know, that's the thing. And if you're patient enough, you get really good ones, kind of like this move off the lows here. It definitely spent some time down there, got people worried, but once it got underway, there was no question about where it was going. And if it's going to continue here, there's real clear levels. So it makes it really nice and easy. Did you guys get involved in any altcoins for the move off the lows, or did you guys kind of just stick to Bitcoin?
Yeah, a little bit on the altcoins. Like I play around. I mean, my biggest core positions are usually ETH and Bitcoin, but I dabble in a little Solana, Avalanche, Cardano, Polkadot. You know, kind of like the second tier, not the biggest ones, but I just play around because those obviously percentage wise, you're going to get a bigger bang for your buck out of them than Bitcoin or Ethereum. So I do definitely play with those a little bit, and then you know I like keeping an eye on some of the new ones. Like Quant is kind of an interesting one. Yeah. You know, that's had a major run. I love the head and shoulders, the inverse head and shoulders that it had and how it played out to target. And basically, I'm keeping an eye on it in terms of if we get a retrace here, this would kind of be my zone for rebuy or buying it. So right around like 120, 125 right here, if it pulled back there, that should be a pretty good support. You can see this shoulder, head, and then shoulder, and then the breakout. And I think the coolest thing about this is for those people out there that, you know, just some of the cool stuff about technical analysis is to calculate the breakout target, take the lowest point of the head and draw a vertical to that line. And that distance will be the same generally, unless nothing's perfect, but in general, and it turned out to almost be to the dollar. That's the same distance there to there. And that's where you topped out right there. So kind of cool stuff in terms of technicals about how things work. And then for me, I honestly didn't even look at this chart until it was already breaking out. So by no means did I participate on the bullish side, but now it's on my radar where if it pulls back here, then I likely would be interested in buying it.
Very cool. Yeah. Quant's a very popular one right now. A lot of hype with the ISO. I think it's ISO 2022 coins. But yeah, it kind of to your point, like I saw that inverse head and shoulders too, and I was like, it's so clean. Can I trust it? You know, it's so obvious. Like, can we trust this pattern? But you know, it's like you said, you know, if you've got risk management, it doesn't really matter. You can take the loss, and it's just a loss. You know, it's not going to wipe you out or anything. CVO is the big Solana guy. He's been nailing Solana and driving home that there's some opportunity there, even with the market and the network going down. You know.
It's always those ones that, you know, have the worst news. I mean, obviously there can be times where you have a Luna scenario, but, you know, generally, you know, when the worst news is coming out, definitely is when, you know, I like to pay attention to it. It's funny, you mentioned how, when some of these inflection points come in, we're coming to an apex on certain areas on the chart. A news event is right around the corner or usually timed out to it. And that's something we touch on all the time because, one thing with Magic specifically, he is, in my opinion, he's a beast at, fib times. And, for 2 years, 3 years back, back when we were in the middle of printing money, there was no Fed, FOMC interest, nothing, right? Back in the day, he was putting out these dates that, as we started coming into them this year specifically, each and every one, which he noted 2-3 years ago, was a major FOMC interest rate meeting, a CPI data report, just interesting how it all lines up. Another one coming into this time, I don't know if you want to cover it or not, Magic, but we talk on it a lot, is the 1-to-1 from our last basically, bull run is coming in essentially right now in November. It's November 7th. You've got obviously the FOMC meeting tomorrow, and then you got the midterm elections all stacked up in that like 1 week window. And the market's just basically been sideways since June. So it's very interesting, and I'm just curious to know what your thoughts are on that for like the midterm elections too. You think that plays a role at all, or is that something that's just going to kind of come and go, and then the price action is what it is, and that'll just be noted as a side note, if anything?
Yeah, I mean, I've always been a believer that the charts always kind of predict, much the same as Magic, is that you see a pivot in a chart, and then or you see a resistance coming in, and then you don't know what's going to be the trigger for the pullback, but then all of a sudden, like a news story breaks, right, or something like that, and it's just kind of cool how that stuff happens. So looking at the charts, I definitely think that's the predictor about what will happen. And I've never found, one of the things with, when you talk at like midterms and this is sometimes, especially when it comes to politics, it brings in emotion, right? And emotion can be the downfall of the best investors in the world. So I definitely, I pay attention. Like I'm definitely on the zone of knowing what's coming up. Like, okay, when's the Fed, when's the midterms? But I try not to let it play too much into my analysis as it can start to kind of shade things a little bit.
Yeah, I agree with that.
Yeah.
One thing I was going to bring up is, what are your thoughts on, a lot of people would say with midterms coming up that it's actually more of a bullish event when the opposing party does get to take over, because then less gets done. Basically, they just fight each other. No major policies are going to get passed because our government can't work with each other at all. So it's more of a risk-on environment because people think there's more stability in terms of policy after that. Do you put any weight on that, or?
No, I definitely agree with that. I think in general, the market does agree and likes that. It's just not being surprised, right? The market likes to know the rules, and when you have one party controlling everything, then the rules can change, right? All of a sudden you can have new regulation or this or that. And so I think there is something to it for sure, where the markets would prefer gridlock, although, arguably as you'd still hope in gridlock that common sense would prevail, but that's not the case anymore.
No, I watched one of the UN things the other day where they were voting on like a secret vote. We're going to vote to have a secret vote. And then they voted to see if they were going to re-vote and recount the votes. And I was like, this is politics in a nutshell right here. This is a complete waste of time. I would agree with that. I think that they do want that gridlock. And to me, I want to put more on the Fed for, my own personal, like how I look at it. And it's mainly because I know we're going to get, I don't know anything, but we had a pretty good indication we're going to get 75. Do you think if they went 50 in December and just front loaded all of the rate hikes, would that be potentially disastrous? Or do you think they have to take a pause here?
Oh, wow. That's a good question. So I think that the market is pricing in the pause by us having this rally. Although today with the dollar popping, I think it's beginning a little bit more of a gray area. But I do think that a 50 in December would be a little much for the market to take. If the Fed said, hey, we'll do another 25 in December and then pause, I think the market would kind of be like, okay, at least they're pausing in 25. It's only 25. Yeah. But I think we'd sell off if they basically came out hawkish and said 50 again in December. We're kind of alluded to that. And going back to what we were talking about politics and how the gridlock is best, what's fascinating is that while the economy is good, I think gridlock the market does like. But what you'd have to be intrigued by and think about is, if we slip into a recession, and let's say it's starting to get to a bad recession, and the Fed can't print us out of it because inflation's so high, does then the market regret gridlock, because then you can't get any spending bills to come out to stimulate growth? And it's just, again, I'm just thinking, 2, 3, 4 steps ahead, but it is interesting to think about that is that it doesn't allow for spending bills to come out that could actually stimulate growth.
Yeah, I think the only big one I can think of is the student loan forgiveness. I don't know if that's going to go through or like what they're doing with that, but I don't have student loans. That's why it doesn't really affect me, but it's one of those things where I imagine that's a big issue, not only in just a lot of people's minds, but it's going to be a lot of spending, kind of like you were alluding to. So if that gets through, there was a rumor that he was going to send them checks and he wasn't going to just send it straight to the creditors. And I was like, that's really not a good idea. Like we've seen this before with student loans. Like you gave these guys money to go to college and they did not spend it on college. Trust me, they bought food and alcohol as students, things like that. So if you give
the same thing I would have done in my 20s.
Yeah, if you give these same people $10,000, I'll bet they're going to go buy some things. It's just how it is.
Oh man, yeah. At least it was a rumor. I think you're right in that. Yeah, especially if you're the steward of our tax dollars, right? I'd appreciate if it actually went to do what it was supposed to do.
Very true. Yeah, that's asking a lot sometimes.
Yeah, I know.
Gareth, I got a question. So we talked on, the idea of, Bitcoin having a further rally here, upwards of like 25K. Just putting, let's just pretend, I guess, that, we come out tomorrow, we're, as expected, kind of as Magic alluded to, in December, we come out a little less. Next couple of months, Bitcoin's pushing past 25K. If that's the case, what are you considering, what would you consider, I guess, at that point for the market?
So if Bitcoin breaks above my 25K, yeah. So, that's the big question is like, at what pivot point do you start to say, okay, this is the beginning of a new bull run? And again, for me, looking at the chart, that bearish pattern would get broken there around 25. But the problem is that just above that, you have this like huge area of sideways action, which is around 28.5. So it's hard for me, I guess, to suffice it to say, like the way I play it, the way I'm a trader is, and this is more on the trading side, but let's say we break up here and we go there. So now you have resistance being hit. So yes, you've broken this. What I would probably then do, I wouldn't be a buyer here because I never like to buy into resistance. But what I would probably do is I'd expect a pullback to this line, which is also this high pivot, and then I'd be a buyer there. Now, again, whether or not I go like long, I'm not really a long-term trader, but at least that you could make a case for being a good support for another pop, maybe a move to the upside. But you're right in the fact that like every good trader looks at both sides, right? You can think that this is the side that's going to win or that you're going to be right on, but you also have to look at the other side and think, okay, well, where do I change my thesis? Where does my thesis fail?
Right. Yeah, exactly. And I think kind of like Magic said, the neutral side of things is where people really fail. Nick Sell says as someone in his 20s, he uses stimulus to buy new parts for his ATV.
Nice. There you go. Yeah. Well, think about it, right? Think about last year, the government sent those checks to every American, and then think about how much money ended up basically going into Dogecoin and SHIB, right? It was basically the same thing. Although those people probably lost it all, they wish they spent it on booze and other things.
Right. That's a good question. Do you have any Doge? It's pumping. Elon's doing his thing with the Halloween tweet, I guess. So did you pick any of that up?
I've never bought Doge. I have to say, I've never bought Doge.
CBO killed Doge. I'm not going to lie. He started calling for 15 cents like weeks ago and was talking about this range rotation because it was kind of like you were saying, the news came out, but then there was the technical side of things. And if you traded it from either standpoint, I'm a firm believer, like people that trade the news, the issue is you can't have a blank chart and trade. Like that's not a thing. You're going to lose in that scenario. But if you can just combine the two a little bit, you can get the best of both worlds. I'm obviously much more heavy on the TA side, and CVO is as well. And CVO has been looking at Doge, and he's been calling it what if, and I've been ignoring it. And now I'm like, man, I was like, that would have been the easiest 50+%.
I agree. And like, this was a slip up on my part too, is that I knew Elon Musk was likely going to be buying buying Twitter. And so I'm good enough where I do a hop, skip, and a jump. And I say, okay, well then Doge, it makes almost logical sense that buyers will think, oh, maybe he'll incorporate it into Twitter, so it's going to ramp. And I missed this one. I 100% missed it.
Yeah, same. I
Yeah.
think
So
CEO
for
did get
me
in.
too, it's always comical how the news stacks up because when, for example, right, we're in this little window here of time for quite a while. And for me, I was looking at this overall range here that was set in place. It's a pretty high time frame area too. So I mean, this took a while to build out. And we came back into it like all the way back here in August, and it was just this easy trade, right? Get in, first take profits right here at this level, this daily level, stop loss right at break even, right? So you got a small win, stop loss out, obviously, protected you from this 40% downfall here. And then the next move was really just setting the alert right here. And once we got the reclaim back into this range, it was a volume target right here at the point of control, and this weekly were the two that we were looking for. So, and never expected to move that fast, but how things go, especially when you get this long window of accumulation. I mean, the move is fast like that. So if you're trading just based off of the term trading, if you're buying, investing, whatever, off of news only, you're going to be well behind the eight ball if you're coming in on this just because you get the news that Elon's buying because Twitter or whatever the case is, because we're already the move is already underway at that point. But yeah, that was
Did you take profits already, or are you still riding it?
No, I took profits at the point of control and at the weekly, but now I'm actually looking for a pullback, possibly all the way back down to this golden pocket. So we'll see how things go. I mean, it kind of aligns with Bitcoin possibly having a pullback here, depending on how tomorrow goes and things of that nature. We've got a pretty nice new monthly pivot right here too at 11 cents. So coming back down to this region is likely. So we'll see how things go. And then otherwise, for the flip side, obviously, if we start closing above 14.078 cents, 4 hours, daily, then obviously we're off to the races in the to the upside again. So,
nice.
But yeah, that's the one that we were, not the one, but one of the few that we were looking at for quite a while. And it's just always always an interesting take to see how the news just stacks on top of it. And it's always a random tweet, right as price action's breaking out.
Yeah, very
Nothing
cool.
defies the market like hype. Let me tell you right now, like
That's right.
that's what moves a lot of crypto. So
That's it.
Yeah. Now, do you guys dabble in stocks at all, or you guys are strictly crypto?
So I chart the SPX, and I used to do some stocks. I had charted out like 20 of them, and most of those setups played out. But I get so many requests on crypto charts and stuff that it's like that's kind of our base. A lot of people want to look at that, and we did take a look at Meta and Amazon the other day. So I would be curious.
I was just curious because Meta is kind of in that scenario where everyone's just panicking on it. So you got this real emotional reaction off of the latest earnings and him spending so much money. But I'd be curious about your take on it.
I looked at it the other day. I told him I'm not a catch a falling knife kind of guy, on something like Meta. But if you were looking for a discount, you've been going down and down and down. I had some levels marked out. You were coming into essentially a 786 right now, and you're closing below it. And I was like, realistically, you have to be prepared on this one that if you are to start averaging in, to be buying down to probably $72. And that's okay. If you're looking for long-term positions at that time, I think you're coming back to a really big area that could be setting up for a much larger range, meaning that could serve as a base and you could rally off of it and get, a really great trade out of it if you were taking it. So it'll be interesting to see what it does here. If I was looking at this area support, what I'd want to do is I'm more of like a swing failure pattern. Yeah, I can show them real quick. I don't have anything on it. I'm just looking at the chart. But
gotcha.
Yeah, so for all intents and purposes, I'm not looking at anything specific. I would just be looking for, like a trigger to actually get in the move. Like, okay, here's a sign of strength. We had a swing failure pattern, whatever it may be, or maybe there's a pause. I think a pause in market, rate hikes. The rest of the market's going to react well. I don't expect Meta to be any different after it's been beat down this hard. So, yeah.
Nice. Yeah, pretty amazing drop. Again, down 75% from $1 trillion company to 250 billion. And yeah, just to see some of the drops in tech. And it makes a lot of sense, right? If you look at and again, not to get off the crypto side, but Apple actually went up on earnings, but a lot of the other ones, Google, Microsoft, and Amazon all got hit. And they've had so many years of just constant hedge fund and mutual fund and all these funds money flow and just pension funds. And then you have to see that kind of give and take, right? So you can't just have a one-way street. We know that eventually you'll see that fear, and then it drives it in the opposite way. So the question is, like you guys, where's your max? Where's your max? And like you said, look for that reversal signal, bottoming tail, key trend line, something to kind of denote a reversal maybe starting.
Yeah, I agree 100%. Same with Amazon. Like Amazon, it didn't miss earnings that bad. I think the big issue on Amazon was their expenditures went way up. So that was the thing. But that's another, that's a company that's like, you look at it and you got to go, Elon's not buying Twitter to put these guys out of business, or maybe he's going to try, I don't know. But Amazon that's been a big, cash cow for a long time. It's expected to have a big pullback. The question is, can you find value and, identify that and then get in,
Right.
Kind of like we were saying, if for the people that were prepared, these are opportunities.
Yeah, I agree.
Yeah, one thing I wanted to, when we were talking earlier, Gareth, Magic and I, we've gone back and forth on the idea as well of max pain for the market, right? So, everybody is very split at the moment, and it's either 10K or 50K, right? It's either going down to 10K or we're, back in the bull run and we're running up to the golden pocket. We're running up to the melt up target of 50K. Once again, talking on Bitcoin, obviously. And to us, the max pain idea, really could be very well that we just trend sideways for longer than anybody can imagine. And, one thing here, I'm not sure. I brought this up on Debate Crypto one time, and obviously not married to it, but just interesting how it correlates a little bit. Looking at a little bit of the Nasdaq from back in the day. Essentially, this is the 2002 high. If you overlaid Bitcoin's price action where we are right now, it's essentially this move, right? So everybody loves a good comparison, but you'd have, essentially your 20K high, 2018, 3K low, 14K, COVID dump, 65K, 30K, 69K, all the way back down, retesting the all-time high, right? Give or take, you got a couple wicks below. This is a weekly chart, but just for comparison purposes only. And then it was forever until, this was, several years, like you said, before we even got back up to the golden pocket. And then, a time a ways from there before we made new all-time highs. So very interesting to note that, we could see something like this too, right? Where we never actually break down below, get that 10K move, never necessarily, not never, but don't get up to this, higher area. Granted, in between, like you said, the swing trader, it's going to be paradise for quite some time if this is how things play out with Bitcoin.
It'll probably be a big deleveraging event too, because you got to think, if it chops around like that for years, the amount of people that are going to get caught at the top and the bottom multiple times over and over again, they're going to get washed, rinsed, and repeat. Unfortunately, ranges, which I find to be the best things to trade, end up hurting the most people a lot of times because they just don't understand a trading range, whether it's identifying it with simple horizontals, trend lines, whatever it is, or volume. That seems to give most people trouble. Also because they diddle in the middle too much. They don't wait. They don't wait. But yeah, we'll call that code name Brazil. That's the name for that.
That's the name.
I like that.
Yeah. I like
yeah.
it. Yeah.
And I threw over the time. And once again, this is just pure speculation, but if you saw the same time frame, break down for Bitcoin like that Nasdaq chart, it's not going to be 20 years because obviously the Nasdaq was built. This is only a 3-year window right here. That was like a 15-year window or 12-year window in the Nasdaq chart, but that wouldn't have us going back up to 50K till like April or May of 2025, which would be very interesting if that plays out. Big keyword is the if, right? So
you got to think of all the people that bought above 50K. They're going to be holding for that long? Probably not.
Probably not. Yeah. And then I also think it makes a lot of sense that we could be in a Bitcoin period where you don't see new all-time highs for a long period too, because again, you go back to, well, what was the stimulus for us getting out of the last bear markets? And you could arguably say printing money, right?
Yeah.
Well, if the Fed is going to be hard-nosed because inflation is going to stick around, let's say even at 4% for multiple years, well, it makes a lot of sense that we're going to have to wait till the economy gets so bad that the Fed is like, okay, we just have to print anyways. And maybe that's part of the trigger for that next bull run. But I can't see the Fed doing it until the economy gets in real bad shape. Really, not just a recession, but like a really bad one, like 2008, 2009.
I would agree with that. They seem to be, and I'm not saying their job is easy, but they seem to kind of wait till it's like the polarity is just so much. It's like they've even openly admitted they were like, we should have started raising rates incrementally way before this, but they just kept it artificially low, and we got ourselves into this. And then all the money printing obviously didn't help. So, I guess you kind of might maybe answer this question would be, I think on the dots, they talked about maybe even doing like a rate reduction. And was it the end of 2023 or early 2024? Do you think that's accurate, or do you think they might be a little more hard nosed, or you think they might cave before then?
Yeah, that's a good question. I'm not 100% sure what I would go with. I think a lot of it will just be determined by how quickly this economy kind of slips into a recession. I mean, just
Yeah.
looking at the housing market is in brutal shape right now. Not only were home prices ridiculously high and kind of pricing out people, but then you jack rates up from 3 and change to 7 and change percent on
You
a
can't
30
afford
year,
anything.
and you just
Yeah.
yeah. Exactly. And so, I mean, you're going to see a massive reduction. And then think of all the jobs that are tied to that, plumbers and carpenters and everything else, and it kind of the chain reaction through the system. And then you throw in some other things like
Yeah.
just a slowdown globally and other things. And I mean, it's hard for me to imagine that, we could stay strong for maybe another 6 months or so,
Yeah.
but I got to believe that the consumer at some point is going to fold. They saved a lot of money during COVID. People paid their credit card debt. But if you look at recent credit card debt,
I've heard
it
it's
is
up.
spiking again. Yeah, it's
Yeah.
spiking again
It's not
dramatically.
surprising
So,
coming into the holidays, but at the same time, it's not a good sign either, given that
right.
they're just going to get tighter and tighter, and they're working on bringing that job market down a little bit. It's like, yeah. And I think one of the biggest issues with people is they got into installment billing. And I know that sounds kind of off topic, but the
Oh,
everyday
you're right.
consumer now, they've got a subscription service for everything. They're just nickel and dimed, and things
Yeah.
they probably don't need. But, who am I to judge how they spend their money? It's their money, but doesn't mean it's what you should be doing. But
But
yeah,
like what blows my mind is that maybe these companies that offer these, like, pay $20 a month for the next 20 years to pay off your TV or whatever, like, maybe they don't care what happens in 10 years, but like, how do they not know it's going to end badly, right? I mean, at some point people are just going to be like, you know what, my cell phones and my car payment are like the two payments and my rent. That's it. And then everything else is like, screw it. Like, let them come take it out of my home. And it's like, it's going to end badly, but these companies just offer these payment
yeah.
plans. It's crazy.
Car market's starting to
Yeah.
come down too. I've heard it's imploding. A lot of repos going on. The average
Oh,
car
yeah.
payment is ridiculously high now.
Yeah.
I've got friends that work at dealerships. I know a few, and I've asked them. They said that business has just come to a standstill, and mainly because people, one, don't want to spend the money because they're worried, but two, the rates are. He's like, very few people come in and buy with cash anymore, and people come in and they used to be able to get a car and have a $300 payment. And now they can't do that, and banks are getting a little bit tighter on who they're going to approve. He told me some stories about how banks were just approving people that had like less than verifiable income. Let's put it that way, for like $500 car payments. And it's kind of like you said, like eventually it comes down to like, are they going to buy food or are they going to pay for that car?
Right.
So
Sounds very much like 2007, doesn't it? I mean, it's just like history repeating itself, and it's people fall and companies fall into greed, which is just get that right. Think about the chain, right? You sell that car, you get that commission. You don't really care if that person in 3 years is still paying for that car.
yeah.
It's just get that
Well,
deal
the worst
done.
part is in 3 years, they don't even want the car anymore. They're trying to buy another one and they're upside
Right.
down. And it's like, just bad decisions all around. It's a revolving door. I would be more in favor of eventually, I think that the car market will go to a straight from the manufacturer type approach like Tesla. I just think that's on the horizon eventually, but we'll see, because
Yeah.
there's quite a bit of lobbying that goes in from, dealerships, I guess I should say, to try to dealer groups to keep that business going. I don't really have any other questions. What do you got, CVO?
I think we kind of touched on this a little bit, but Nick Sells in the comment here, he's wanting to know what Gareth's thoughts are of the dollar rising exponentially more for Max Payne. How would the other countries like Japan and Europe react to something like that? Is the Fed thinking about that? Obviously, Gareth wouldn't know that, but what would your thoughts be on if the dollar just kept ripping, I guess, in regards to Japan and Europe reacting?
Yeah, I mean, I'm more in the camp that as the Fed gets closer to stopping hiking and maybe even pivoting in 2023 or 2024, I think the dollar is kind of front loaded a lot of its upside. And I think that, again, the Fed has shown that they're willing. One of the things that caught my eye was 2 Fridays ago, there was that Wall Street Journal article, basically, which the Fed has used to get information out through the Wall Street Journal. And they basically said they're going to raise 75 and pause, right? And then literally an hour later after that happened, the Bank of Japan then said, hey, we're going to start buying yen and selling dollars and supporting. So to me, it struck me as a very coordinated event, which means that the Fed is communicating with the ECB, Bank of England, Bank of Japan. And the amount of breakage that would occur if we did see this max pain dollar would be exponentially bad. So for me, I'm kind of in the camp that I actually am a little bit more bearish on the dollar, and that makes me more bullish on gold in the near term. Bitcoin, again, being a risk asset, I'm still a little iffy on, because I think if the stock market still has a lot of downside, like I think it does, then I still think Bitcoin does get hit just based on that, risk divergence or getting out of risk.
Perfect.
Yeah.
I got I know we're coming up on our time here. I just got one question, and we can even sit on this one and come back to it on another video. I'm just curious, you've obviously been in the markets for quite some time. You referenced 2007 and obviously the 2008 crisis. You've been around for the .com era. One thing that I have been kind of measuring for quite a while is things against the housing market, right? And I know that you obviously have a lot of knowledge in that aspect as well. Crypto, everybody and myself included was a big 4-year cycle type of guy, just because that's really all the data we had at the time. In my opinion, I kind of feel like we're actually maybe building out the first 20-year cycle for crypto, right? As we're kind of just building along with it, because we haven't had that much time elapse, and it was basically born right after the 2008 last collapse, right? As far as the housing market goes, they have these 20-year runs and so on. The reason I bring that up is every 20 years, and like going back just a couple of milestones here, like in the 1960, we had the Cuban Missile Crisis. We had 2 years of kind of like crazy chop around, and then the recipe for the 60s, the 80s, 2000, and 2020, into 22 now. The recipe has always been the same as we're kind of coming to this last leg, possible last leg, right? So in the 60s, you had 1960 Cuban Missile Crisis. We had 2 years of just crazy chop to the point where, people were probably panic selling, getting out, like the markets were, terrible. They, were anticipating more pain. Interest rates were high, and inflation, right? So that's like the recipe every single time towards the, basically Q1 of the third year. So it was in 1963. 1980s comes around. You got the Gulf War. You had, that was the time frame when we had like 25% interest on mortgages, which was like the, craziest time ever in that scenario. 2-3 years of just constant fear, worry, panic, high interest rates and inflation, and then basically another 5-6 year like leg up to the actual end of the I guess you call it like a blow off top. And the same thing happened in the 60s. Then in 2000 you had the same deal. 2001 happens, right? You get 9/11 was really kind of like the shocker around that time, black swan event, if you will. 2 years go by, .com era is in that window. But the real blow off top for all assets was 2008. So 6 years later, right? Inflation, high interest rates, all things included. 2002, 2003. I can't help but but point out, I guess, that we're in the same situation 20 years later. You got a black swan event in 2020. We're 2 years going into 3 on just some crazy chop. Obviously, we've had a little bit more of a run in markets than more so of a chop. But you've had like the same scenario kind of unfold, kind of over and over in a different fashion as well. We got inflation, you got high interest rates, and you got a position where a lot are, expecting more downside in the market. And I guess I just wanted to throw that out there and see what your thoughts are on that. And then, like I said, if we don't have like a ton of time today, maybe that's actually something we can kind of discuss at a later date. But just kind of wanted to get your opinion on that in a drive-by setting.
Yeah, no, I think there's something that every trader should kind of pay attention to. It's a real macro, longer term view, obviously, because you're looking out towards the end of this decade. But
Right.
One of the things, so number one, the 20-year cycle, you're absolutely right on. There's something to it. And one of the things that I would even give credence to, which kind of scares me for later this decade, and this would obviously require us to see even more upside in the markets and new all-time highs before that collapse. But you also then would coincide with the 100-year cycle, which was the Great Depression later this, and so it's kind of crazy like that. I mean, you could even look at the crash of 87, and then, the 07, and then the maybe 27 begins that period and then cycles in. But yeah, I mean, it's one of those things where as a trader, I'm happy I'm a trader versus a long-term investor, because I certainly think we're coming into the next decade where whether we don't see new all-time highs or we go on this crazy run and then have a cataclysmic depression, we want to be ready for whatever comes our way and be able to trade around it. And I think that's the biggest thing is be nimble, don't be greedy, right? Because it could end on a split second.
Yeah. And Nick says that it's crazy how history repeats itself so accurately. And really what it comes down to is in all those scenarios, people are reacting the same to the same things, because the reactions don't change much in human nature, especially in markets with fear, greed, things like that, buying and selling. those same types of events a lot of times get the exact same type of reactions because humans are human. Wash, rinse, repeat. That's if you can grasp that one concept as a trader, as soon as you get that, the light bulb will go off and you're okay, so.
So true. So true.
Perfect. Hey, Gareth, really, really great to have you on today, man. Hopefully we can have you on again in the future. Really appreciate all your feedback, your intel, your input, your knowledge. Magic, always great as well. For anybody that's interested in following, if you're not already following Gareth, please do. His information down below for Twitter. His 2 websites, inthemoneystocks.com and verifiedinvestingcrypto.com. You can also find them there as well. Definitely worth a view. You can also find those on Twitter as well. So that's all the time we have for today. Hope you all enjoyed this. If you enjoyed the content, please like and subscribe, and we'll see you all in the next video.